Welcome back to Talk Tickers, the show that takes you on a deep dive into the most important earnings calls of the quarter. And today we're tackling Meritage Homes Q4 2024 report.
Yeah, it's a really interesting one because we're seeing, I guess you could say, a home builder not just surviving, but kind of thriving in a market where everybody is, a little bit on edge about those interest rates. They record closings for the year. They beat their own revenue projections. They kept their margins healthy. And on top of that, they seem to be doing right by their customers.
Okay, well, before we kind of jump into the weeds on this one, can you just set the scene for our listeners? What were some of the big picture numbers that jumped out at you from the call?
So first off, for Q4, they pulled in $1.6 billion in revenue and closed on 4,044 homes. I mean, that alone is pretty impressive. But they also had a gross margin of 23.2%, which means, they're keeping a good chunk of each sale after covering those direct costs of building. But here's the thing that really caught my eye. Their SG&A expense was only 10.8% of revenue. That's a really efficiently run business right there.
Okay, so clearly they're doing something right.
Yeah.
But the housing market has been kind of a roller coaster the last little while, with the interest rate hikes. So how is Meritage handling all of that?
Well, they're playing it smart, focusing on affordability and offering what they're calling move-in ready homes. Basically, they're ensuring that those houses are almost done before they even list them, so buyers can move in quickly and lock in their REITs.
Okay, that move-in ready strategy, it does sound clever. Taking some of that uncertainty out of the equation, what kind of impact has that had on sales?
I mean, it's been fantastic. Their backlog conversion rate, which is basically, a measure of how many people who reserve a home actually close the deal, well, that hit a record 177%. Almost everybody who put their name down on a Meritage home actually bought it. I think that shows real confidence in their product and the process.
Yeah, that's a really compelling statistic. Seems like they're resonating with buyers.
Yeah.
Especially those looking for entry-level homes.
Absolutely. I mean, 91% of their sales this quarter were in that entry-level category. So they've really tapped into a sweet spot in the market, High demand, buyers less likely to be spooked by those rising interest rates.
Smart. Plain and smart. Staying agile. But are they thinking about expansion at all? I mean, it seems risky in this market.
Well, they're not shying away from growth at all. In fact, they recently acquired Elliott Homes, which is going to give them a bigger presence down there on the Gulf Coast. And get this, they're launching a new division down in Huntsville, Alabama. Apparently, that market is absolutely booming, and, Meritage wants a piece of that action.
Expanding while others are pulling back. I mean, that's a bold move. Shows a lot of confidence in their strategy, I guess. What about land, though? Are they stocking up for this growth spurt?
Oh, yeah. They're playing the long game here. They've got 85,600 lots in their portfolio, which is about a 5.5-year supply, if you're basing it on their 2024 closing numbers. And here's where it gets really interesting. They're not just buying up land. They're using some pretty innovative financing methods like joint ventures to kind of manage those costs and fuel, more ambitious growth.
Okay, so pretty impressive land bank there. It sounds like they're in a pretty strong financial position to actually pull all this off. What do the numbers tell us about their overall financial health?
They're doing well, to be honest. I mean, healthy cash balance of $652 million and a low debt-to-capital ratio of just 11.7%. Basically, they're not over-leveraged, and they've got plenty of financial wiggle room. Plus, they're committed to giving back to their shareholders with, increased dividends and stock buybacks.
Okay, so they're doing well in the present. They've got big plans for the future. But what about the immediate road ahead? What's their outlook for 2025?
Well, even if the year starts out a little slow, they're projecting to close somewhere between 16,250 and 16,750 homes for the full year. And revenue, they're thinking, will land between $6.6 and $6.9 billion. I mean, not bad, right?
Oh, not bad at all.
Yeah.
So cautious optimism seems to be the mood, which I think is understandable in this market.
Yeah, I think so, too. And, they're feeling good about the spring selling season, but they're also ready to adjust those incentives, if they have to keep the sales going. They're adaptable. That's what's going to help them navigate this market.
This whole incentive game is a kind of tightrope walk, isn't it?
Yeah.
Trying to balance affordability for buyers while protecting those margins.
Oh, for sure. I mean, in Q4, they had to ramp up those financing incentives, especially the rate buy downs, to counter those, a bit unexpected mortgage rate swings. So that did end up putting a little bit of pressure on their average selling price, which, dipped 4% year over year to $400,000.
Okay, so using those incentives strategically to keep those homes attractive, especially to those core entry-level buyers. But what about the impact on their bottom line? Are those incentives, are they eating into their profitability at all?
Well, their Q4 2024 gross margin was 23.2%, which is down 200 basis points compared to last year. So yeah, there's definitely an impact there. But it's important to remember that there's a few things that are contributing to this margin squeeze.
Okay, well let's break that down then. What are some of the pressures they're facing?
Well, first off, land and development costs, they're still running high, and there's no sign of that letting up anytime soon. And then on top of that, they've had to adjust commissions to keep those sales teams, keep them motivated in this tougher market. And that, of course, that also cuts into their SG&A.
So kind of getting hit from multiple sides.
Yeah, it is. It's a real balancing act, I guess. But there is some good news, in all of this. They're direct costs, meaning, the cost of materials and labor for each house, that's actually gone down. They've been able to negotiate with suppliers, get some volume discounts from, building more homes. And also, those supply chain improvements have helped as well. So at least there's a little relief on that front.
So it's like they're squeezing efficiencies out of every nook and cranny, which is pretty impressive given everything else that's going on. But those lot costs, those sky-high lot costs, I mean, that seems like a really tough problem to solve.
Yeah, that's where that their land strategy really comes into play. Remember those joint ventures we talked about?
Okay.
That's one way that they're getting creative with financing those land investments, without completely throwing their balance sheet out of whack.
Okay, so not just acquiring land, but also being strategic about how they're financing it. Makes sense for the long term. It's like they're playing 3D chess with their finances.
Exactly. I mean, that forward-thinking approach is really what sets them apart. They're not just reacting to the market. They're trying to, anticipate and stay ahead of the curve.
And it sounds like that proactive mindset, it extends to their commitment to energy efficiency as well. Are they still sticking to that even with all these cost pressures?
Oh yeah, they're definitely still committed to those 100% energy efficient homes, but they are being realistic about, the changing landscape of those government incentives.
What do you mean? Did something change with those incentives?
Well, yeah. The IRS, they recently raised the bar for qualifying for those energy tax credits under the Inflation Reduction Act. So that means, fewer of Meritage's homes will automatically qualify for those tax breaks.
So are they scaling back on those energy efficient features to cut costs?
Not exactly. They've made the decision to not go all in on meeting those tougher new requirements.
That's an interesting choice. Why not just go the extra mile to get those tax credits?
Well, they're thinking about their buyers, and they believe that the added cost of meeting those higher standards, it wouldn't actually be seen as as that valuable by their customers, especially now when everyone's so focused on affordability. They're focused on features that actually benefit the homeowner, not just checking those boxes for a tax credit.
Yeah, pragmatic approach for sure. They're sticking with their commitment to energy efficiency, but they're also being mindful of their target market's needs. Speaking of which, they're pretty heavily focused on that entry level segment, right?
Yeah, for sure. I mean, 91% of their Q4 sales were in the entry-level category. So it's really a testament to their strategic positioning in a market where that segment is showing some real resilience.
But does that mean they're ignoring other buyers like those looking to downsize?
Not necessarily. Move down buyers still make up a decent chunk of their business, about a third to be exact. But yeah, they've definitely found their sweet spot with that entry level buyer.
Yeah, makes sense. Catering to a segment that's holding strong, even with all the economic headwinds. Now we've talked a lot about these incentives, but I'm curious how that's playing out in different regions. Is it kind of a one size fits all approach, or are they adapting to to local market conditions.
No, they're definitely tailoring their approach to each market. Take Texas, for example.
Hmm.
Even with those high interest rates, they've seen some really strong demand there, and they've used incentives strategically to kind of keep that momentum going.
So not just throwing incentives around, but being targeted, strategic.
Exactly. Yeah, they're analyzing each market and adjusting their game plan accordingly.
But what about markets where they're facing more competition from resales? How are they handling that?
That's a good question. And it's something they're definitely keeping a close eye on. But they seem pretty confident that their new homes, especially those move-in ready ones, have a real advantage over existing inventory.
Okay, well, what are some of the advantages they're playing up?
Well, for one, they can offer those rate locks and buy down options, which gives buyers more peace of mind in this, crazy interest rate environment. That's not something you typically get with a resale.
So using their financial tools to kind of create a competitive edge
Yeah.
makes sense. But are they just playing the numbers game, or are they highlighting other benefits of buying new?
Mhm. Oh, they're definitely playing up that whole new is better angle too. They're emphasizing things like, modern designs, energy efficient features, and the peace of mind that, comes with a brand new home.
Okay, so crafting a whole value proposition that goes beyond just the financial aspects. But with all these moving parts, the incentives, the competition, the fluctuating interest rates, how are they managing to stay on track with their growth plans? They're pretty ambitious.
Yeah, I think the key there is agility. They're
Yeah.
they're constantly watching the market and they're ready to, adjust their strategy if they need to. They've shown that they can adapt and thrive even when things get a little bit unpredictable.
That adaptability is it's really impressive. They're not just hoping for the best. They're actively managing their business to succeed, no matter what the environment throws at them.
Right, exactly. They're taking charge, they're making smart decisions, and they're positioning themselves for long-term success. It's pretty exciting to watch, to be honest.
Yeah, inspiring to see them charging ahead with so much confidence. But we've got a lot more to unpack here. So let's take a quick break, and we'll dive into the next layer of this Meritage story when we get back.
And we're back, digging deeper into Meritage Homes. One thing that really stood out to me about their growth strategy is that they're not just kind of throwing darts at a map. They're being really deliberate about, where and how they expand.
So you're talking about that Elliott Homes acquisition, right? That
Yeah.
seemed pretty strategic. Can you fill us in on what Elliott actually brings to the table?
Sure, it's all about strengthening their position in a market that's already pretty hot. The Gulf Coast. Elliott Homes has a solid reputation, for quality construction and happy customers, which aligns perfectly with Meritage's own values. It's not just about adding square miles. It's about finding a company that really fits with their existing strengths and enhances their brand.
So a synergistic move, not just a land grab. That makes a lot of sense. And then there's the Huntsville expansion. What's the story there? Why Huntsville, Alabama, of all places?
Well, Huntsville is it's kind of a hidden gem down there in the southeast. It's got this booming economy, fueled by job growth and a lot of new residents moving in, and you know what that means: increased demand for housing, especially the kind of affordable entry level homes that Meritage specializes in.
So they're not chasing fads. They're identifying markets with strong fundamentals. It's like they're following those economic breadcrumbs to opportunity.
Exactly. Doing their homework, analyzing the market trends, crunching the numbers, to make sure that their growth is sustainable. This isn't a gamble. It's a calculated strategy.
And it all ties back to that long-term vision that we talked about earlier. They're not just focused on next quarter's profits. They're building a foundation for lasting success.
And let's not forget their impressive land strategy. They've amassed this massive land bank. But I am a little bit curious about how they're actually acquiring all these lots, especially with competition so fierce in the land market.
Right. It's not like land is just sitting around waiting to be snatched up. They must be getting creative.
Yeah, they are. They're not afraid to think outside the box when it comes to financing those land deals. We've talked about joint ventures, but they're also exploring other off balance sheet financing options to secure those prime locations without overextending themselves financially.
Can you break down those joint ventures a little bit? It sounds a bit complicated, for us non-finance folks.
Oh, it's actually pretty straightforward. They team up with other players, like developers or landowners to share the costs and risks of, acquiring and developing the land. Think of it like a partnership where each party brings something valuable to the table.
So a way to pool resources and leverage each other's strengths to get access to those desirable properties, kind of a real estate parity team.
Exactly. So Meritage gets access to that prime real estate while their partners, they benefit from Meritage's, their industry know-how and their financial stability. So win-win.
Yeah, it's a smart way to navigate the complexities of that land market and ensure they have a steady pipeline of future communities.
Right. Their land bank is like a treasure chest full of potential.
Okay.
And their strategic expansion efforts are like a roadmap to turn that potential into reality. They're not just building homes, they're building a lasting presence in these markets.
Now let's shift gears a bit and talk about their financials. They've delivered some solid results, but how are they managing their margins with all these cost pressures and the increased competition? Seems like a real tough balancing act.
Oh, they are masters of efficiency, that's for sure. They've streamlined their operations, they've optimized their construction process, and they've implemented cost-saving measures to counter that margin squeeze.
Okay, well, give us some concrete examples. How are they actually achieving these efficiencies?
Well, they've managed to significantly reduce their construction cycle times, which means they can, build homes faster and turn over their inventory more quickly, reducing those carrying costs. And then plus they've strengthened their relationships with suppliers, negotiating better prices and locking in more favorable deals on materials.
So tackling the problem from both ends, streamlining internally and leveraging their buying power externally, kind of a smart two-pronged approach.
Exactly, leaving no stone unturned in their pursuit of operational excellence.
And their efforts are definitely paying off. You look at their financial reports; they're demonstrating that you can stay profitable even when the market gets a little choppy, as long as you're disciplined and innovative and proactive.
Yeah, proving that success isn't just about, riding the waves. It's about building a ship that can weather any storm. And they've got, a talented team at the helm, a crew that's passionate about building quality homes and exceeding customer expectations. It's not just a job for them; it's a mission.
And that passion, it translates into happy customers, which is a powerful thing in any industry, but especially home building. Speaking of keeping customers happy, their move-in ready strategy seems to be a real game changer. What's the feedback been like from buyers? Are they responding well to this approach?
Oh, it's been a hit, especially with buyers today who really value speed and certainty. In a world of instant gratification, people don't want to wait months for their dream home to be built. Meritage's move-in ready homes, they eliminate that waiting game and take the guesswork out of the process.
So they've tapped into the pulse of the modern home buyer. It's about more than just bricks and mortar. It's about providing a seamless and convenient experience.
Exactly. And that's reflected in their impressive backlog conversion rate. People
Mm.
aren't just reserving those homes; they're actually closing the deals and moving in. That really says something about the appeal of this strategy.
Yeah, it's a brilliant way to set themselves apart from the competition and cater to what buyers really want.
Right. And it all feeds back into their brand. They're not just selling houses, they're selling peace of mind, quality, and a commitment to exceeding expectations.
And let's not forget their commitment to energy efficiency. It's not just a trend for them; it's a core value.
Yeah.
They're building homes that are stylish and comfortable and environmentally responsible.
Yeah, it's a winning combination. They understand that today's buyers, they're more eco-conscious than ever before, and they're delivering homes that align with those values,
Yeah.
sustainability without sacrificing style or comfort.
Now let's talk about their long-term ambitions. They've set this really audacious goal of reaching 20,000 homes by 2027. How do they plan to actually get there? I mean, it's a big leap from where they are now.
It is ambitious, no doubt, but they've got a multi-pronged approach. They're strategically expanding into new markets. They're driving efficiency in their operations to free up resources, and they're relentlessly focusing on customer satisfaction to build that loyal following.
So firing on all cylinders, hitting every aspect of the business to drive that growth.
Exactly. And it's not just about hitting a number. It's about building a company that's built to last, a company that's synonymous with, quality and innovation and customer delight.
Now they've also shown a commitment to giving back to their shareholders, with the dividends and stock buybacks.
Yeah.
How are they balancing those shareholder friendly moves with their growth ambitions? It seems like there could be some tension there.
It's a delicate balancing act for sure, but they seem to be managing it well. They understand the importance of rewarding those investors while also investing in future growth. It's about creating a win-win for everyone involved.
Can you break down their approach to dividends and buybacks?
Sure, they've got a consistent dividend policy in place, providing a steady stream of income to those shareholders, and they've been actively repurchasing their own shares, which reduces the number of outstanding shares and boosts those earnings per share. It's like a double dose of shareholder love.
So using both levers to enhance shareholder value
Yeah.
makes sense. It's impressive how they're juggling all these priorities: the growth, the profitability, customer satisfaction, and shareholder value. It shows real leadership and deep understanding of how to create a thriving business.
They're setting the bar high for the entire home building industry, and their success is an inspiration to others in the sector. It shows that you can do well by doing good, and that's a powerful message.
Now let's zoom in on their regional performance. We know that they operate in a variety of markets, each with its own unique flavor.
Hmm.
Can you highlight some of their key regional strengths and challenges?
Sure. Let's start with Texas, one of their star performers. They've seen incredible demand there thanks to job growth and migration patterns and a relatively affordable cost of living, compared to other parts of the country.
So they're riding that Texas wave,
Mhm.
and their deep understanding of that market seems to be a key advantage.
Oh, absolutely. They know what Texas buyers are looking for, and they're delivering it.
But what about markets where they're facing, tougher competition from resales? How are they adapting their strategy in those areas?
They're not backing down from the challenge. They're emphasizing those benefits of buying new, the modern designs, the energy efficient features, and that new home smell. Plus, they're leveraging those financial tools like the rate locks and the buy down options to sweeten the deal and provide more certainty in this volatile interest rate environment.
So differentiating themselves, giving buyers a reason to choose new over existing inventory.
Exactly. They're not just reacting to those market shifts. They're proactively shaping the market with their innovative approach.
Let's look ahead. They've issued guidance for 2025, but what are some of the some of the key factors that could make or break their performance in the coming year? What are the things that you're watching closely?
Well, interest rates, they're the big wild card, as always, you know. The direction and the volatility of interest rates, that'll have a huge impact on affordability and buyer demand.
So they're keeping a close eye on the on the Fed and the broader economic landscape.
Yeah.
It's a game of anticipation and adjustment.
Exactly. Staying agile, adaptable, ready to pivot if they need to. And it's not just about interest rates. They're also watching the overall health of the economy, the job growth, the consumer confidence, inflation, all these things play a role.
It's like they're playing this multi-level game of chess, trying to anticipate the moves of the economy, the competition, and those ever-changing preferences of home buyers.
Yeah. And they're doing a pretty darn good job of it. They're navigating a complex landscape with skill and confidence. They're not just surviving, they're thriving.
Now, on the topic of competition, how do they see that landscape evolving in the coming year? Are they expecting things to get even tougher?
Oh, competition is definitely going to be fierce, both from other builders and from the resale market. But Meritage seems pretty confident in their ability to stand out from the crowd with their focus on affordability, their move-in ready strategy and their unwavering commitment to customer satisfaction. They're not afraid of a good fight, and they're bringing their A game.
So they're not backing down. They're leaning in. They see competition as a chance to push themselves and raise the bar even higher.
Exactly. They're constantly innovating. They're looking for ways to improve their offerings and exceed those customer expectations. It's that relentless drive that really sets them apart.
It's inspiring to see their unwavering commitment to excellence. Even in the face of adversity,
Yeah.
they're a company that's truly passionate about what they do, and that passion, it's contagious.
It really is. They're not just building homes. They're building a legacy, and it's exciting to kind of witness their journey unfold.
Now let's zoom out for a moment and consider the bigger picture. The housing market has been on a bit of a roller coaster ride lately. What's their take on the long term outlook for housing? Are they optimistic? Are they pessimistic?
Yeah, they're definitely optimistic about the long-term fundamentals of the housing market. They believe that the core drivers of demand, the population growth, the household formation, and the desire for home ownership, they're still strong.
So they're not letting those short-term fluctuations shake their faith in the underlying strength of the market. They're playing the long game.
Exactly. They see the current, slowdown as a temporary adjustment, not a sign of a fundamental shift. They believe that the demand for housing is still there, simmering beneath the surface, and it'll eventually reassert itself.
That's a reassuring perspective, especially for those who are feeling a little jittery about those recent uh, market volatility.
Yeah, it's important to remember that the housing market is cyclical. Ups and downs, they're a natural part of the game. What matters is how companies navigate those cycles and emerge stronger on the other side.
Meritage is proving that they've got the resilience and the adaptability to do just that. They're not just weathering the storm. They're using it to their advantage.
They're a testament to the power of innovation and determination and a customer-centric approach. They're not just building homes. They're building a better future for themselves and their employees and their homeowners.
It's been fascinating to kind of delve into the inner workings of Meritage Homes. Their story is one of grit and vision and a relentless pursuit of excellence. They're truly setting a new standard for the home building industry.
I couldn't agree more. They're a company to watch, and their journey is far from over. They're just getting started, and I for one am excited to see what they do next.
Well, folks, that wraps up our deep dive into Meritage Homes for today.
Mhm.
We've covered a lot of ground, from their financials to their growth strategy to their outlook for the future.
And remember, this is just, a starting point. We encourage you to do your own research and stay informed about
Right.
the ever-changing world of housing. It's a dynamic and fascinating industry, and Meritage Homes is a company that's shaping the future of how we live.
But before we sign off, let's have a little fun with our "This is not financial advice" segment. If you're feeling adventurous, and have high tolerance for risk, here's a wild but but plausible trade idea.
Ooh, I love this part. Lay it on us.
Buy Meritage Homes stock before the spring selling season kicks into high gear. If their predictions of a strong spring market come true and interest rates stabilize, their stock could see a pretty significant jump.
Now remember, folks, this is purely hypothetical and definitely not financial advice. It's crucial to do your own research and make informed decisions, based on your individual circumstances and risk tolerance.
Exactly. But hey, it's always fun to explore the possibilities, and consider those different scenarios.
It is, and this thought experiment it highlights Meritage Homes' potential for growth and their strategic positioning in a market that's ripe for disruption. They're a company that's not afraid to shake things up, and that can be very, very rewarding for investors who are willing to ride that wave.
Well said. Until next time, keep those thinking caps on and happy investing.
Yeah, they're definitely a company that's, playing that long game, and they seem to have a real knack for navigating, those twists and turns of the market. Their move-in ready homes are really resonating with buyers. Their land strategy is sharp, and their expansion plans are, they're well calculated. It's a recipe for success,
Yeah, like they've cracked the code for thriving in a really challenging environment. But let's talk about the people who are actually buying these homes. Their customer profile has remained remarkably consistent, even with all the economic ups and downs. Can you kind of paint us a picture of the typical Meritage home buyer?
Sure. They're attracting a financially savvy and responsible buyer, primarily first-time home buyers. Think solid credit scores, mid 730s range, and debt-to-income ratios, around 41, 42%. And these buyers typically have loan-to-value ratios in the mid 80s, meaning they're putting down a decent chunk of cash.
So they're not just selling to anyone with a pulse. They're targeting buyers who are financially stable, less likely to default on their mortgages. That's a smart move from a risk management perspective.
Oh, absolutely. It reduces their exposure to potential losses and contributes to their overall financial strength. They're building a business on a solid foundation of responsible lending and financially sound customers.
It's a real testament to their understanding of the market and their ability to identify the right customer segment. Now we've covered a lot of ground today, from their financials to their strategic moves to their long-term vision. But if you had to boil it all down to one key takeaway for our listeners, what would it be? What makes Meritage Homes such a compelling story in today's housing market?
I think it comes down to this. Meritage Homes is not just reacting to change; they're actively, shaping it. They're embracing innovation. They're putting the customer first, and they're making those bold moves to position themselves for the future. They're not afraid to take risks, and they're executing their strategy with precision in a market that's full of uncertainty. They're a beacon of confidence and a real testament to what's possible when you combine vision with execution.
Well said. It's been a fascinating journey exploring the world of Meritage Homes with you today. Thanks for sharing your insights and helping us decode this earnings call.
Oh, it's been my pleasure. Until next next time, keep those ears peeled for more deep dives into the companies that are, shaping our world.
That's all for today's episode of Talk Tickers. We'll be back soon with more earnings call breakdowns, market insights, and of course, our This Is Not Financial Advice segment. Until then, stay curious and keep investing in your knowledge.